Hello everyone, I'm Corey Mitchell with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of October 7th. It is the evening of October 7th, so Monday has already occurred for the stock market. And we're just going to look at how things are shaping up. I look at a few different things: how market indices are performing, market health indicators, recent watch list and trade performance, and sector performance, which tells us where some key areas in the market may be to focus. And overall, conditions are looking good. If you're looking for some stock watch list to cut down on your time, you can check out the best swing trading stocks list for October. That's really high momentum stocks, the current swing trading stock list. That'll be updated today or tomorrow. And you can also check out best performing stocks and ETFs and some of these other ones if you're a more longer term trader or investor. So let's look at how the indices are doing. I look at several different indices. We have the NASDAQ 100, the S&P 500, NYSE Composite, and the Russell 2000, and the Canadian index up here. And they're just looking at a little bit different segments of the market. We have large caps, small caps, very broad array of stocks in the NYSE Composite, a little more tech focused in the NASDAQ 100, Canadian more energy focused and basic materials focused. And we can see everything moving up recently. A little bit of a pullback and kind of consolidation over the last week and a bit. But overall, we have made higher swing highs and we are still at higher swing lows. So higher swing high here relative to this one, higher swing low, and we're still at a higher swing low. So uptrending movement at the moment with a little bit of a pullback starting, or at least a consolidation phase here. Don't know how long it will last. And the Canadian index moving very well, still moving to the upside. Bitcoin trying to get to the top of that descending channel. This is a 2-day chart just so I could show a little bit more of the context of what's going on. Because it's a 24-hour market, we end up with a little more activity. Extra days in here relative to these other ones, so it ends up looking a little bit more cluttered. That's the only reason I put it to a 2-day, just to show that we had this really big up move and we've just been chopping around since, and yeah, trying to work our way up toward that. The ultimate goal would be the big breakout, and I'd probably wait for the pullback to stay outside that old range, end up buying somewhere in here again. There's also these shorter term opportunities. We had talked about one back here, an entry point as it was coming off the lows, wait for the move up, a pullback, and then buy as it starts moving up. The last one I didn't like as much, or this pullback I didn't like because the price had kind of stalled here, and then it only popped up just a tiny bit and then started to decline again. So that showed some weakening of this move, that this pullback was coming, and I just didn't like it as much. So I'm going to wait for a little bit of strength to come in, then I'll buy on a pullback. And if it continues to be weak, then we're out, or staying out. Gold still acting very well. I just threw the zigzag, which shows percentage up and down of these moves. So yeah, gold moving really well. Nice run up here, just pulling back or consolidating a little bit. The gold miners moving in the same direction. They are uptrending, but you can see it's been kind of a choppier path than with the gold itself. So I would say this is still confirming, still okay. And lately we've been having this kind of 15 to 20% up, followed by a decent size correction. We're about 7.5% into this one. The last few have been 9%, 14%, 12%. So this is, based on what we've been seeing recently, a pretty normal size correction. Let's look at the market health indicators. These just tell us what's going on underneath the hood of the market as opposed to just looking at the price action. And although some of them are based on price action, like this one, this is the rate of change. So it's just the daily percentage movement of the S&P 500. When we have really big down days, that's usually a warning sign. We had one back here. The selling continued, for at least for a little bit, and just said step away. Usually when we get a big 2% down day or more in the S&P 500, I see no reason to step in. We usually will miss nothing if we step away for a couple days. Here's another example. Big drop on September 3rd, I believe that was. got a little bit more downside. Getting involved right away would have served no purpose. Step away for a few days, wait till price action levels off. And it's been pretty calm lately. Calm is indicative of uptrending, bullish type behavior. Big volatility, big down days especially, are associated with volatile, choppy, downtrending type conditions I want to avoid. That's why I step aside as soon as we have one of those big 2% down days. Haven't had one in a while. So that's good. This is the NYSE advanced decline line, advancing stocks minus declining stocks. I use the NYSE because it's a very broad measure of all sorts of stocks, different industries, different sizes. And you can see it's pretty much doing what the S&P 500 is doing. It's moved to new highs. It's kind of been flatlining a bit along with the S&P. So it's basically confirming what the S&P 500 is doing. And the S&P, while, of course we would love it to run higher, it isn't doing anything especially bearish either. Would maybe expect maybe a little bit more sell-off, but who knows? I could also just pop right back up and go. I'm not in the market of predicting. I simply analyze market conditions and trade based on that. So if it's good, I trade long. If market conditions aren't good, I'm either out of the market or I'm short. This is the up volume divided by total volume, and nothing of importance here. I'm looking for extreme values up this upper black line or this lower black line, and you can see we're just in the middle, so showing kind of an assortment of decent upside volume followed by some little bit stronger downside days. It's just kind of mixed, which we expect most of the time, but we're looking for extreme values here and we haven't had any. So that's just a neutral, not telling us anything at the moment. A note on this one is that I find this most important when either we get really extreme selling kicking in, but in terms of extreme buying, it's not really of interest to me unless we've had a correction. So, the indices have fallen 5, 6, 7, 8, 9, 10%. 5% maybe not even is that big of a deal. But once you get close to that 10% mark, then that's really when I start looking for those upside volume days where you have a huge spike to this upper line, which means at least 90% of the volume that occurred that day occurred in stocks moving to the upside. Extreme amount of volume coming in stocks moving higher. Not the amount of volume, just that there's a high percentage of volume. The stocks that are moving up account for most of the volume, that high percentage number. But now it'd be, since we are moving up, a very bearish reading or an extreme downside reading would be a warning sign to really be aware. This is the percentage of stocks above their 50-day moving average, just a very crude measure of stocks in uptrends. We have 74% of stocks in the S&P 500 above their 50-day moving average, and 60% of all U.S. stocks are above their 50-day moving average. Generally much easier to make money on the long side when these are above 50, which they are. Sectors on the move, energy having a good week. Other than that, everything else in the red, as we saw from those other charts, everything in this little bit of a correction. And basic materials, consumer cyclicals, technology you could even throw in there. Those have been acting overall pretty well, even though they weren't so great over the last week. Basic materials, consumer cyclicals, communication services, all kind of near the top on this 1 month performance. Kind of improving on the longer term, but mainly I was looking at this, where those have been the stronger ones, just to keep an eye on. Energy coming on recently, so that might be one to watch as well. There are times when market conditions may not be so good, or you're not seeing a lot, but there might be one sector that's moving really well, and that's always something to keep in mind. We can focus in on those sectors. So long trades in stocks right now, conditions are fine for what I do. On the long side, gold stocks would be included in that. Lots of stocks, because gold has been strong, those are naturally going to start showing up on our watch list. Bitcoin, not an ideal entry for me right now, but it is working toward the tops, and overall I kind of like the idea. I'm just waiting I like the long-term structure of Bitcoin, but at the moment not seeing an entry that I like. Can also day trade if you're looking for more kind of constant action. Swing trading, more of a seek and find type style of trading where you might have periods of activity followed by periods of inactivity, whereas day trading's more you have something to do every day. Also, passive investing I recommend for everyone to do in the background. You can check out resources on that. If you're ever wondering where this article is, it is updated each week. If you go to tradethatswing.com under stocks, stock market analysis and trades, it'll be right up there near the top since it gets updated each week. So have a great trading week out there.